Hello dear traders, you're watching an overview of the Asian session. We are going to discuss today why the US dollar may decline and what facilitated the yen's growth. We will also talk about the movements of the Australian currency. Let's get cracking. The Asian stock market is trading sluggishly as investors are anticipating US inflation data. The report is due in the second half of the day. The Fed is sure to take notice of inflation figures as they will surely influence the regulator's monetary policy decision. For this reason, the US dollar index is trading in a narrow range. Since the beginning of the week, the greenback has slightly changed against its main rivals. Now it's holding at 95.52. Analysts believe it will stay in the narrow range of 95.20 and 95.80 until the release of inflation data. The greenback is likely to be slightly volatile after the publication of the report. Technically, the euro has a better chance to assert strength, while the US dollar is expected to fall. The dollar-yen pair was able to consolidate above the target level yesterday. This is why it may approach 117.17. So far, it has already hit 115.61, signaling further growth. But even though the pair has been growing steadily for some time, it may also get support from the stock market. The Nikkei 225 index is climbing higher. It has already added 0.35%. However, today's weak statistics may undermine bullish momentum. Japan's producer price index in January totaled 0.6% versus the previous reading of -0.2%. In annual terms, the index came in at 8.6% against 8.5%. The yen-based import prices soared by 37.5% in January from a year earlier, indicating that the weak yen triggered higher input costs. Today, the dollar-yen pair may try to break through the support level of 115.20. If it fails, the bearish sentiment will creep back into the market. In this case, the pair will begin to decline to the target levels of 114.79 and 114.93. The S&P ASX 200 index grew by 0.3% today. The Aussie has also been rising for 3 days in a row, gaining 1.5%. The greenback rose only by 0.1%, so the AUD-USD pair reached the level of 0.7190. However, today, in the Asian session, the pair is moving down. Given the Melbourne Institute's monthly inflation gauge and US inflation forecast, a price reversal could be rather sharp. The annual inflation rate in Australia is expected to climb to 4.6% from 4.4%. US consumer prices are likely to amount to 7.3% in January after December's 7% gain. Apparently, there are lots of signs of the upcoming correction, which is necessary for the pair. The Aussie began to exhibit strength against its rivals only after moving above the level of 0.7065. Now, as seen on the chart, it has already crossed this threshold, approaching the level of 0.7189. After that, it keeps growing. If the pair slides into a correction, its nearest target level will be 0.7108. If this scenario comes true, the pair may decline to 0.7065. That's all for today. Keep abreast of the latest market news on InstaForex TV channel. Feel free to leave your comments and questions. InstaForex analysts will try to answer all your questions, and see you very soon.